All right, good afternoon. Here again with another market update. Troy Walker, Director of Crop Nutrients, here today with Devin Schierling, Director of Sales for MKC and Mid-West Fertilizer, Scott Barkley, Vice President of Energy for MKC and Mid-West Fertilizer. Let's go ahead and open this up. We've had a little bit of a fun conversation just getting into this. Scott, let's give us some of your thoughts on what's going on in the world today and the energy market specifically.
Yeah, so since we spoke on this cast here a couple weeks ago, we've had kind of an interesting market dynamic that's developing. We've got some big forces, not just energy forces, but big forces across markets that are kind of predicting this pending fall apart, specifically of the financial markets. As a result of perceived economic hardship in Europe, some of the economic bad indicators that are coming out of China, there are people who feel like that the economy as a whole, worldwide economy, is on the edge of a pretty big drawback, and certainly we don't have a whole lot of reasons to think that that's not true. But we're starting to wonder how much of that is already built into the market, and if there is going to be maybe a little bit of a letdown for those people who feel like we're at the edge of this really large cliff. Some of what we also have discussed is that somewhat quietly, China has announced that they are moving up their election. They have an election. I'm going to use air quotes for those of you, obviously you can't see us. But they have an election every 5 years. That election was scheduled to happen in November of this year. China has moved that election up by a month, and that's interesting because there's speculation that the Chinese economy, which is very much locked down still because of COVID, may open up post that election in the middle of October. What does that mean from us from an energy perspective? Well, if the Chinese economy does open up almost suddenly in the middle of October, the demand for energy products is going to go up. Which typically would lead to an increase in price. So that's definitely something that we're thinking about.
Yeah, China opening up, like you say, Scott, would have a big impact on all three of our areas here: energy, grain, and fertilizer. China's been out of the fertilizer market, urea and potash, where they're the world's largest producer or exporter of both. They've been out for over a year. The word we have is that they won't re-enter that market until January or sometime in next year, but that's only as good as the information that you can get out of that country. So if they were to come back in, that certainly could increase the world supply, the global supply of some fertilizers, which would change the market.
Yeah, and Troy, that would also make a big difference when we looked at the overall supply. So right now you have a lot of different weather events that are going on all over. So we talked about Europe, we talked about the U.S., and we're really relying on South America to really help push us through from a supply standpoint. They're planting beans right now, and with La Nina being forecasted to stay there, that's a positive for them because it is a little bit dry as we speak, but they're able to put their beans in the ground, and then once it starts raining, it usually continues to rain. It'll get those beans off to a really good start. And from this volatility theme that we've always been talking about here lately, since we first started our cast, on the 18th of August, we've seen over $1 change in the July 23 wheat market, and how that's impacted the profitability of our farmers. And so we look back at how does fertilizer prices change, how does gross revenue on the farm change, but most importantly, net farm income. And so we've seen people really take advantage of at least having that conversation on that 23 and even 24 wheat markets from that standpoint, with levels being over $9 and over $8 respectively in those 2 months.
Yeah, I think back to a conversation you and I had, Devin, probably earlier this week, where we were talking about profitability on the farm, understanding that profitability and where that comes for you. Is that, with the extra 50 cents, if you can capture that on corn, what does that mean for your farm's profitability? And how does that counterbalance relative to a $50 increase in fertilizer or more that we've seen?
Yeah, finding that common language is never more important today than, and that's the language for your individual farm. because I think as we customize these approaches, I think today more than ever, we have to look at each individual field and see what is the best commodity to grow to generate the most income we possibly can. And it takes a higher level of precision than it ever has. Right now we're in the wheat averaging period. We're 2/3 the way through this period, and we're going to be at the second highest level ever in the last 12 years of where that base price is. So it's a great foundation and starting point for us as we look to future years' profitability.
Yeah, and we've seen the fertilizer markets overall solidify a little bit. There's still some volatility as there's not a lot going to the ground yet. Urea is starting to pick up. We've seen some anhydrous go out for urea and some dry fertilizer as well. But as we see more of that, and particularly across the country, we'll see that those markets firm up and get a little more direction than what we've had over the last several weeks.
Yeah, and to follow up on something you said, Devin, where we've seen the market move quite a bit over the last couple of weeks. A couple of weeks ago when we were together, we talked about, from a diesel perspective, having a little bit of patience. And the diesel price, at least here locally, that contract has come down 30 cents since that time period. I think, to kind of wrap up some of this conversation, the message this week, I think, would be that as you're looking at profitability on your farm for next year, now's probably a good time to think about layering in risk management, especially on the diesel side, the energy side of things. As we talked about, if China does open up, if we do get a hurricane, if anything that would impact demand to diesel supply, because we are so low historically diesel inventory right now, we have historically low diesel inventory in the United States. If we would get something that would majorly impact diesel supply or demand, I think the price really could run. So not that you want to necessarily lock in all of your usage right now, but if you are somebody who likes to layer in risk, I think now's the time to take off a chunk.
Yeah, and layering in risk is a great conversation, because whether you're using futures and options to help offset some of that energy risk, I think that's also a great time to look at the current cash values of grain locally and how that impacts your operation. Basis levels at a lot of our locations will vary greatly, but they're all significantly positive, and historically those are a negative basis. So as that grain comes in, how do you want to capture or take some of that risk off the table by pricing it, but then still giving yourself some upside? So visiting with your grain marketing specialist or brokerage specialist to be able to get that plan in place to stop storage, capitalize on the uniquely high market, and then still have flexibility in case, like Scott mentioned earlier, demand takes off and this world looks completely different 45 days from now. I think it's a great thing to be flexible and take that risk off the table.
Yeah, absolutely, and certainly adding a layer. I like that, Scott. Adding a layer against your fertility is an option, whether that's in the nearby for wheat, or we'll see some Q4. And we have the opportunity to do some Q1 and Q2 fertilizer as well, depending on how far out you're looking. But take a little bit of layer, take a little bit of risk off, put a little profit in your pocket. And this is a good opportunity and good time to do it. So with that, I appreciate everybody tuning in. We enjoy the feedback that we get, and we'll look forward to talking to you here soon.